something just broke the global markets. There are reports of a possible US ground invasion into Iran.
Mhm.
Oil is exploding past $110, and safe havens like silver are collapsing instead of rising. That tells you one thing. This isn't panic. This is repositioning. In today's video, we'll break down what this means for markets, Bitcoin, and where risk is actually heading next. Hello, everyone, and welcome back to Strategic Markets, your place for fundamental and technical analysis all at once. Now, into our end of week session, we are starting off with some actual breaking news. Just about 3 hours ago, President Trump has approved plans for a ground invasion into Iran, which could last for for 2 months, sorry. And funnily enough, we discussed this in our last week operations that look, Trump had said he wants a 5 to 10 day delay. He wants to do some negotiations, but this could have all just been a little bit of a plan to get ground troops closer and basically have a little bit of, you know, time to reload their weapons and get things ready before they actually proceed to go ahead and do this ground operation. So it is going to be fairly significantly more dangerous to the US troops over there. And I can't even begin to imagine how the markets are going to open in on Monday. Like if we have a look at Brent crude oil over here, we talked about how Brent uh, oil lost a bit of what's it called strength with this particular downwards move. But by Friday, it just picked up so strong, like as if the markets have faith that this war is gonna be make oil tight and we're not going to be able to get more oil through the Strait of Hormuz, causing a supply and demand issue. So right now, I'm really interested to see how the futures open up tomorrow morning, but we are not at an easy position over here. Another thing to look out for, silver has dropped nearly 50% from its all-time high while this particular geopolitical issue is happening, guys. So people are not taking what's it called, imported metals seriously anymore. With a near 50% descent, this is really tough and taxing on the people because they're not taking a inflation hedge anymore. They're just moving to safety, unknowingly what's happening, and to basically make ends meet with the cost of living itself. So
Mm.
this is very interesting news. Some more aspects that we're looking forward to is this big week coming up ahead. Now, the Fed official speaking, the continued focus on Middle East is important aspect. The jobs openings as well in February is going to be an important point of discussion. If this comes down as low, then they're going to be under pressure to have to consider rates. But the more important aspect is this US manufacturing and PMI March that's going to come out in on Wednesday. Look, in the past, I have found some correlation with the PMI. So the PMI is the Purchasing Managers Index, also basically known to show relevantly for manufacturing as well. So it basically shows whether businesses in America have good manufacturing. So if you're looking at this chart, you're probably seeing, okay, so the PMI index shows manufacturing, which basically shows that businesses are spending more money on building things to make more money, then that means something for the economy because that means more job and there's more liquidity in the market. And in the past, if you look at some instances in 2017 and upwards, you can see over here that when we were in 2017, we started moving up from the range of 50 all the way high to 60. Bitcoin had a move as well, all the way up to the 14K, 17K level. In the past, again, in about mid-June to what's it called, the 30th of June 2021, Bitcoin had a bull cycle again from the lows of 12K, 6K, all the way to 60K onwards on our left side over here. Again, we had PMI bottom out at 45 in June 2023, which is relevantly where Bitcoin was in a bear market. But then we have had it move up, and the correlation of Bitcoin's price moving above it is actually a reasonable correlation upwards as well. But very recently, as the PMI has shot up, Bitcoin's going down, and I'm guessing that's something to do with geopolitical risk. Now, if this PMI consistently keeps moving up or has a high higher rate, I'm very interested to see how Bitcoin responds to that and whether we have correlation towards the upwards. So that's something I'd be looking forward to. On other topics as well, we have some interesting news. Japan's bond market is basically collapsing because Japan is very reliant on the Strait of Hormuz, and 90% of its oil comes from there and 75% of this gas, which means that Japan is one of the second largest holders of US bonds.
Mhm.
So if US JPY, if US dollar keeps getting strength against JPY, well, they can't have trade with US dollar. So Japan could intervene and start selling its US treasuries, which would be really bad for the US economy. Steve will cover a little bit more on that a bit later. But if that happens, guys, this could be devastating for the US bond markets. And as much as I don't want to be a bear, this is the news that we are currently being handed. What that means for my favorite asset, Bitcoin, well, look, on the weekly, it's not looking pretty, especially on the daily as well. We are, as I said, in this bearish flag, but we have broken down from this bearish flag, and now we could possibly come in to test the resistance line over here. So what happened last time? We broke down from the bearish flag, tested the support, which turned into resistance, and then we went downwards. I could see something very similar happening again as well. We come up with that little test, and then from there onwards, we could go down to the bottom. Now, personally, I am eyeing the 62K level. The 62K level for me sits as the last range of support, wicking down maybe up to 58K level as well. But those are my last points of holding that, okay, we possibly have a reversal because on the weekday chart, we're coming to this particular point on the MACD. And if this MACD over here crosses bullish, then there's probably some hope, which probably won't if we keep going downwards. And on the RSI, we've been discussing on the week that we have broken down this red trend over here. And if we have broken down and this holds and we keep moving upwards, great. If we don't, we just have some massive bearish action. And we've talked about this particular logarithmic chart of Bitcoin over here over the monthly and the weekly aspect. We are coming towards the support aspect. If we break from 62K level over here, 63, 62K, guys, in my opinion, we are in full bear territory because we are breaking logarithmic support. So, relevantly speaking, we are a key decision point over here. And this is where I turn from like relatively hopeful to full bear. And that's my own thesis and emotions on it. Even Ethereum right now, Ethereum is holding on multi-week support at about $2,000 to 1,900. We break below this and we have confirmation. In the past, we break on below and we've come back up. But if we are going below 1,900 level or 1,800 level and we are making multiple closes below that, again, we're in full bear territory over here, and there's just really nothing much to say from that particular aspect. One thing I'm hopeful on is look, at the end of the day, 63,000 Bitcoin was bought by institutions in the last 30 days, with 15,500 just being sold by panic sellers. Right now, the demand is there. Something is telling me that there is some institutional flow coming in. We discussed Feb as well, where 25% of Ethereum supply moved from short-term holders to long-term holders. So there is some hope for me personally thinking that, look, this might be a fake out incident, or we might go down to 58K to grab the liquidity before we start moving back up, only because the weekly seems to be smoothing out. But right now, the only other thing that we haven't catered for is geopolitical events. If Trump is playing a great game, we might start moving up from April onwards. But if Trump is not on hand with this, and we don't know if he's capable of managing this well, in that case, we are just at the bear line, about to go to the downside. So be prepared for both aspects. Wait for your confirmations. But yeah, very relatively so. I'll pass it on to Steve for his technical analysis over here.
Okay, terrific job there, Yash. You've covered a lot of ground in a very short period of time, and thank you very much for that. And as you could actually see from everything you actually discussed there, there are a lot of moving pieces there. So let's have a quick look. Firstly, with the biggest catalyst of everything that's been going on this week, and that really is Brent Crude. We'll have a quick look at that, and then we'll discuss all of the other aspects that you're really having a look at overall with everything else there. So firstly, with Brent Crude, our biggest areas of interest are the 4-hour support and resistance lines that we've been discussing over the last few weeks. As you can see, we are jammed smack bang in the middle of both of those, without a doubt. Brent crude closed at 110 at the end of the week. It is right jam back in between those two support and resistance areas there that you can really see. So what does that mean? Well, we can be heading in between either of those, potentially breaking out one way or the other, like we've been discussing over the last couple of weeks. Overall, we can really see quite a lot of catalysts more than likely moving us towards the upside. Could we be breaking down a little bit towards, in terms of reversion to the mean down here? There is always a potential towards that in terms of testing these support areas or these rising moving averages, of course. But as we've been discussing over the last few weeks as well, there is a lot of pressure in relation to the options market. Now, I've been keeping an eye on this as well, like we've been discussing over the last few weeks as well. And really, there is still a lot of call options being purchased in USO in particular. And taking a look at USO, that actually closed at $124 at the end of the week. Now, this is really, really fascinating because looking at the April, May, and June contracts, there's still a lot of those contracts being purchased at the 135, 140, and 150 strike prices, tending towards those April, May, and June contracts overall. So essentially, a lot of people are locking in the rights to buy at those prices over those months coming up. So there's a lot of speculation going on, and there's a lot of people basically saying, well, hey, I wouldn't mind being able to buy those at those prices going forward over the next few months. That's quite speculative, and they're basically locking in prices at those prices and those times in advance. So there's a lot of people basically thinking that there's going to be a prolonged war for quite some time, and they're locking in those prices for quite some time. Now, taking a look at those headlines that Yash had basically actually mentioned before, you can really see that there's quite a lot in advance going on in terms of the war and potential for quite an extension of everything going on there. So you can really see the reason behind all of this. And there's really no tending indication of anything turning downwards so far in terms of either Brent crude or USO. So you can really see the situation there. If we take a look at the volatility chart, you can also see the same situation occurring there. This has been edging upwards for quite some time. And overall, in relation to this as well, we've had a large spike in volatility, even just on Friday as well, with a 13% rise in volatility in just one day alone. So we can really see that that's actually edging upwards ever so slightly, ever so slowly, continually upwards towards that big spike that actually occurred in mid-March. So quite a lot going on there. The risk on environment is not just in terms of volatility, though, it's also in terms of the US dollar. The US dollar also edging upwards, and you can really see it edging away from that former resistance area, which is now acting as a support area from $99.21. Currently, the dollar is now trading at $100 or just over $100 when we were talking about that only on Wednesday when it was trading at what level was that? Around at $99 at that particular point in time when we were talking about that. The bonds, as Yas was basically mentioning as well, being a problem, especially in terms of Japan selling off all of their bonds in particular, or starting to sell off a majority of theirs. Well, we're actually at September lows at this point in time over in terms of the US bonds. Should Japan, maybe even China, in terms of potentially selling off some of their bonds as well, they're the two largest holders of US bonds overall. Should they end up selling some of their bonds overall, this could be a potential problem in terms of US bonds. Why? Well, if they sell off some of those in terms of September bonds, or sorry, the bonds overall, I should say, we could be breaching through below those September bonds, potentially going down towards previous July lows and maybe even more lows below that. Why is that such a major issue? Well, bond prices are inversely correlated to yields, being interest rates. And as you can see, the interest rates themselves are rising quite substantially. Now, could this happen in the immediate future? It might not. Why am I saying that? Well, take a look at how far away they are from the short-term moving averages. In terms of the yields themselves, this could come back to the mean, so to speak, may come back a little bit there, basically meaning that the bonds might rise a little, the interest rates might come down a little, and then they might come back up and go straight through. So watch this space and see how that goes. The reason why I'm basically mentioning all of this, though, and why Yash is mentioning all of this as well too, is because we could have some bouncing around going on here, and these may relate to the actual indices as well, being the stocks, the equities, however you want to refer to them. And the reason behind that is, in particular, you take a look at, say, things like the Russell, which are extremely prone to being influenced by interest rate rises. If we have interest rates going up, 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 very, very interest sensitive stocks, such as those on the Russell, will more than likely actually fall through this, say, 200-day moving average, for instance. And should it do that, that would put more pressure on the markets themselves. The Russell in particular, it's one I'm actually putting up here right now, is a composition of 2,000 stocks in particular. They're the small cap stocks. But if this falls through, this is the only index in itself there that's actually still holding up above the 200-day moving average, by the way. But if this falls down, it will more than likely actually put pressure on all of the other indices which have already fallen through the 200-day moving average. Those indices, the Dow Jones, for instance, you can see it's already fallen down through the 200-day moving average. If we also go take a look at, say, the SPY, which is a composite of 500 big cap stocks, that's really fallen through the 200-day moving average. And the same also with the Nasdaq, which is a tech-heavy index. That's already really fallen through the 200-day moving average, as you can also see right there as well. So we're already seeing a large amount of weakness overall in relation to the markets. Really, really big major issues going on there. But the worst is not over when we really think about a lot of things overall. Yash also mentioned gold and silver. Gold in particular has been sold off for quite substantial amounts overall. And you can really see that quite a lot in relation to this particular green line here, which has been the VWAP. The VWAP is a really, really good indication in terms of whether the sellers or the buyers are in control. Anything below the VWAP in particular, which is a big major area of interest, generally indicates that there's a lot of selling going on when the sellers are in control. And on top of that as well, you're trading well below a lot of these moving averages, the short-term moving averages, as well as some of the long-term moving averages, this one being the 100-day moving average. It's bounced off the 200-day moving average. Sure, it's a good sign, but overall, we're still jam-packed between a lot of other moving averages, and we're just treading water above some of these support resistance lines here. So gold's looking okay at this point in time, the same with the gold ETF, but silver is the one that's really dragging its heels, okay? That's the one that's really been pulling everything down quite a lot for quite some time, especially after that big, massive 30% drop in one day. And that was following a major, major rise for quite some time. And on top of that as well, there was a huge rise in all of that option volatility, a little similar to what we've been seeing with Brent Crude as well. But let's now go on to the really, really big favorite one from what Yash loves to talk about, and that's Bitcoin. Now, a lot of people will be looking at Bitcoin and saying, well, what the heck has happened here? Well, we can see what exactly has really happened overall here. We've had this nice rise recently, but look at this VWAP, okay? That's the thing we've just been talking about with a lot of the other indices and with gold and all of those kind of things there. A lot of things have been going on here with this in terms of sellers are in control for quite some time. And you can see that actually up here as well too. As soon as the sellers got in control from up here, it's been struggling all the way through and has not really regained much ground for quite some time. Tried to regain some ground, but fell flat on its face for quite some time here as well too. The biggest thing is it's been trying to actually gain here, and we actually saw on Wednesday that it was actually getting above its short-term moving averages, being this yellow and cyan line here, and we thought, hey, it might actually be starting to gain some traction. However, we also said on Wednesday that it needed to get through these 4-hour support and resistance lines, as well as this prior support and resistance line here at $72,000. Unfortunately, it didn't. As soon as it actually tried to actually get through even the first 4-hour support and resistance line, fell flat on its face again, and actually went straight back down here, testing another prior support and resistance line back here at the 68,800 level. Went right through that area here again and is now testing another level here in terms of the 67,500 level, as well as this level here at the 66,000 level. It's right around this level right now. So as you can see, there's a lot of dynamics at play. But there's an even bigger dynamic at play as well too. And we've been talking about this one for quite some time with Ethereum, and that's this 21,000 level. Okay, 21,001 to be exact. And it's been testing that for quite some time. But on top of that as well, for both Bitcoin and Ethereum, there's this 50-day moving average. And it's been testing that as well, bouncing off it, and bouncing underneath it now. You can see that for
Mm.
both Ethereum as well as Bitcoin. Okay, it's a bit hard to see with all the other blue lines there as well, too. So I do apologize about that. But it does bounce up and down over it and under it all the way through. There's a lot of dynamics in play, and it can get very, very confusing. But that's what we're trying to really delve into here and try and clarify throughout all of these here. So where do we see all of this coming through in terms of clarifying this and getting away from all of these mumbo jumbo kind of antics that is going on with all these traders? You'd really need to clear all of this stuff and get up above all of these areas before you can even claim that there's going to be some positivity and some bullishness in relation to all of this. And Yash has done this very, very nicely by showing these bear flags, because if you look at this particular chart, the bear flag is constituted by drawing that line above those highs. You get above those areas, you get above that VWAP, and you get above that 4-hour support and resistance line area, then you've got the case for the bullishness. But another interesting aspect, we've been talking about this as well too, is the banking index. Interestingly, now we have Bitcoin, we have Ethereum, and we have the banking index all seeming to be aligning. Go figure. We weren't seeing that previously, but now we're seeing some form of correlation occurring here as well too. So everything seems to be actually moving in terms of a risk-off sentiment at the moment with everything going along. And our timing today, especially with the ground invasion coming along a couple of hours ago, doesn't seem to be out of alignment whatsoever in terms of the way everything's going. So it looks as though we're getting everything forming into a perfect circle. Everything seems to be coming along and basically now forming into this really, really wonderful mixture where we can basically say everything's into one pot. We've got Brent crude rising along, and now we've got all the other risk assets starting to form in terms of bubbling downwards and falling downwards. We have the major commodities in terms of gold and silver attempting to find their way, attempting to actually finding a way to stabilize. But should they actually continue to fall, that could then lead to the stock indexes continuing to fall even further. That's part of cycle theory. Normally, when you have all of your metals actually falling away, that can generally lead to the stock indexes continuing to fall. So keep an eye out for those kind of things there. That would lead to a general risk-off sentiment occurring throughout everything overall. In terms of things like we've been saying in the last few videos, keep an eye out for levels to confirm. And even Yash said that towards the end of his discussion as well. Wait for confirmation to be able to make a decision on any assets that you are actually looking at. Doesn't matter whether you're a long-term, conservative, or an aggressive investor. Always wait for confirmation to make your decision based on anything that you're actually looking at overall. And that's been the general sentiment of everything we've been discussing over the last number of videos. And with that, mate, I'm going to pass it right back to you in terms of concluding the statements.
Well, there you have it, folks. Looks like current hot commodity is oil. And as long as that keeps rising, a lot of the markets around us are struggling because right now we're all dependent on it. Even in Australia, in terms of things getting deliveries and postal and parcels and any transportation of any type is having an effect on all goods and assets. So with that being said, have a look out on that. If your support levels break, then it's probably your time to reassess how you go ahead with things. On that, that is the end of our week session. If you liked what you saw today, feel free to drop a like below. Any comments, whether you think that we could do anything better or whether you agree or disagree with us, please, we'd love to read your comments. We'd love to see what you have to say. And then
Awesome.
lastly, if you are enjoying our sessions and you do find them briefly or informative, then in that case, please drop us a subscribe and that would be great. Otherwise, thank you so much for your time. Wishing you the best.
Thank you. See you soon.